Hello traders, so in this video we will discuss trading myths that are losing you money and failing your FTMO or any other prop firm that you are doing. The first one is, of course, technical analysis doesn't work, only fundamental analysis works, and this is completely wrong. Many people think that we can only look at the fundamentals and the news and that moves the market, but actually on the lower time frames we can spot chart patterns and trade accordingly. So when you look at a buy pattern, what technical analysis actually tells us is 50% of the time that this pattern loses, 50% of the time this pattern wins. But when it wins 5 times as much as when it loses. So if you see this pattern, there is a 50% chance that the price will explode to the upside and potentially start a large uptrend. And this is how we make money. We don't know if the price will go up or if the price will go down. We just know that if it goes up, it will go up substantially, and if it goes down, we have a tight stop loss that will take us out for a really small loss. So no, technical analysis does not predict price movement, but it just gives us statistics so that we can keep the winners much bigger than the losers. If you're wondering, the patterns that I trade actually have around 30 to 40% win rates, so I mostly take losses.
Hold this L for being stuck in traffic, bro.
And that just solidifies that I really don't know if the markets will go up or if they will go down. And I don't care, to be honest. Number 2, you can't make any money on the lower time frames, such as the 1-hour chart or the 15-minute or the 5-minute. Well, yes, you can. We do not need to be long-term investors looking at the daily charts, looking at the overall weekly trend, and then buying, holding for 3 or 4 months. We as traders want to be holding for maybe a few hours, maybe a few days potentially. If of course we are in a large uptrend or in a large downtrend. So backtest the setup on the lower time frames and you will see that you can make money on these lower time frames. Also check out some of the FTMO interviews with traders getting huge payouts. You will see that they mostly trade the 1-hour, 15-minute, maybe the 5-minute chart. Number 3, trading is too complicated. Trading is simple, but it's not easy. It doesn't take much effort to learn a trading strategy, but the psychology is what is hard. Knowing when to buy or sell is really not the issue. It is acting upon that signal is where the issue comes along. It is taking consecutive losers, it is taking consecutive winners, but still keeping a clear head. Again, this is all psychology. That is why in backtesting it is so easy to make money, because there are zero emotions. But once you go live trading, well, now emotions come in, and that is actually the hard part of trading. Number 4, traders take trades every single day or every single week. Traders need to be in the market all of the time. Now this is a big issue, and this is actually called over trading. Many traders believe that they need to be in the market at all times to make money. If they're not in the market, they get anxious, and of course they have zero patience. Well, the most profitable traders are market snipers. They wait for the perfect opportunity. Sometimes they may even wait for a month, maybe even 2 months to take that perfect trade. But once they take the perfect trade, that trade usually banks huge amounts of money. So the more patient you can be, if you just focused on the 10 best, most high probability setups in 1 year of trading, you would make so much money, because those setups would probably go make 10, 15, maybe even 20 are in return, and that's per setup, of course. The best setups make the most percentage. And one more problem with trading every single day or every single week is that the market has different phases. There is the trending phase, volatile phase, and the range bound phase. If you trade through all 3 phases, you will lose all of your profits, and you will always be around break even, because you will make money in trending markets, lose it all in the range bound markets, or you will make money trading the range. But once the market starts to trend, well, now all of your profits are gone. So me as a trend trader, I need to identify a range bound market, and I need to know when to stay out, when not to take any trades, in order not to lose all of my profits I made from trading the trend. And guess what? On the 1-hour chart, which I trade, these range bound markets can last for 2, 3, maybe even 4 weeks, maybe even 2 months. You never know. But we always know that trends will come in the end. And once the trend comes, I will make those huge percentages. No-brainer setups happen very rarely, but when they do happen, we need to be prepared and we need to take them. We need to, of course, wait for them to happen. So patience is very important in trading. Being patient is hard, but you can learn to be patient. Number 5, I can learn to trade in a few months. Now, of course, on the internet, people are telling you can learn trading in 1 month, 2 months, 3 months. You can make millions in those 3 months. So don't worry, you will definitely get rich quick. Well, that's not true. Trading is a skill. It takes on average 2 years to go from zero to consistently profitable and funded with a prop firm. So just like getting a college degree, just like learning a new skill, it takes time, it takes years to learn how to trade properly. Now, from what I've seen from other consistently profitable traders, they have made it in around 2 years. Some were quicker, some were slower, but 2 years is the average number. Number 6, if I lose, I'm a bad trader. That's completely false. Losses are a part of trading. My win rate is around 30 to 40%, so guess what? Most of the time I'm taking losses. But I don't care, the losses are so small and the winners are so big. Even if I take 20 consecutive losses, I just need one winner to bring it all back up into profit. So losses in trading are completely normal, they're a part of trading. You will never have a 99% win rate. Especially in Forex, the win rate you're looking at is around 30 to 40% because we're trying to catch the trend. So if you're just learning to trade, be prepared to take losses because it's inevitable. The sooner you accept this fact, the faster you will progress. And that brings me on to the point number 7. I must have a high win rate to make money in trading. Win rate does not matter. Every trader wants to have a high win rate because of the emotions that come with taking many winners. When you're taking winners, you're happy, you're satisfied, and you feel like a successful trader. When you take losses, you feel like shit, and it's definitely not a good feeling. So traders try to eliminate the losses, and this is where they go wrong, especially in Forex, where the win rates are so low, as I said, around 30 to 40%, maybe even 20%. But hey, it's normal, that's how you make money. The losses are small, the winners are big. Even if we take 5, 10, 20 consecutive losers, we just need 1 or 2 winners to bring it all back up, put us back into some nice profit. If you focus on the win rate, you will 100% fail. What you should be focusing on is having a high risk to reward. So stop hunting the 90% win rate strategy and actually focus on maximizing your profits from the winning trades. Now, these next few points concern funded traders. If you're just trying to get funded, if you're already funded, these are some of the myths surrounding the prop firm industry. So number 8, I can go from zero to funded within a few months. As I said, the average to go from zero to consistently profitable, possibly funded with a prop firm, is around 2 years. If you rush the process, if you try to do everything in a few months, well, you will have to repeat the process all over again. You will have to start from zero, and in the end, it will actually take more than 2 years. So you might as well do it right from the first try and actually take your time and be patient with the process. Sure, you can get lucky and get funded in, let's say, 2 months. You can place some good trades, pass the phase 1, pass the phase 2. Okay, now you have the account, but have you actually made any money on it? Well, you have not. And the luck that you had with passing the challenge will now run out, and you will most probably lose the account without making any real money, and you will lose the challenge fee, of course. Anyone can get lucky, anyone can pass a challenge, but only a real trader can actually consistently trade the funded account and get those payouts and be profitable every trading quarter. Number 9, prop firms are a scam. So do prop firms actually take your trades? Do they pay out the winning traders from the challenge fees? Well, we don't really know, and to be honest, we don't care. I know FTMO and my Forex funds are definitely paying out their winning traders, so that is all I'm concerned with. Are the payouts coming from challenge fees? Well, they most probably are, since 95% of traders trying a prop firm challenge actually fail the challenge and lose the fee. But again, as long as they're consistently paying out, we as profitable traders can make money. So I would say the prop firms are not a scam. If you know what you're doing, if you're part of the 5% of traders actually making money, well, then the prop firms are a very good thing for you. Number 10, if I have a $100,000 funded account, I can risk 1% per trade, just as I would on my personal account. Now, having a $100,000 funded account is an illusion. You can only go 10% into drawdown or maybe 12% with my Forex funds, and that means you actually have only $10,000 to play with. So you're actually trading a $10,000 trading account, not a $100,000 account. Now let me ask you a question. If you had a $10,000 personal account, would you be risking $1,000 per trade? That means you only need 10 losses to blow up the whole account. So you can't treat your funded account as you would your personal. In your personal, sure, risk 1%, that's the best advice. But on a funded account, lower the risk once you pass the challenge, lower it down to 0.5, maybe even 0.25. That should give you around 20 to 40 losses before you blow the account. So I would say treat the $100,000 account as you would a $10,000 account. because that's what it really is. They just call it a $100,000 account so you feel like you're trading big money. If they called it a $10,000 account but gave no drawdown limit, well, it does not sound as enticing as trading the six-figure account. So it's pure psychology to get you interested. Number 11, being funded is the end goal in trading. Prop firms are just a tool to build your personal account. Prop firms can disappear tomorrow, and guess what? Your funded account is gone. Maybe you had a full allocation with FTMO, you had $400,000, and now it's all gone. You don't have a trading account anymore. What you must do is put the profits you make into your personal account, build up your personal account first, just to be safe, and then even if some new law is passed tomorrow that bans prop firms, you still have a big personal account where you can make consistent money out of the markets. Focus on building that personal account because that's your money and no one can take that from you. So that's it for the video, guys. Hope you enjoyed, hope you took some value. Make sure you like this video, subscribe to my channel. If you're interested in one-on-one coaching calls or a 12-week mentorship program, make sure you check out the link in the description, go to my website, book a call, and I will see you guys in the next video.